Monday morning, folks, and welcome to a brand new episode of Finmet Mondays. Joining me today is a very special guest, Mr. Premnaji. Warm welcome to you on the podcast.
Yes, good morning.
Good morning. Premnaji is a veteran in the space of Bullion regulations, and he's here today to provide us some insight into the latest IGCR notification and what it means for TRK holders who wish to import through IBX. So, Premnaji, let's get right into it. If you had to summarize the details of the notification in one or two lines, what would that message be?
Message is very clear. If the TRQ holders want to import through India International Bullion Exchange and the importer and the TRQ holder are the same entity, then IGCRS is not applicable. If the TRQ holder is not a qualified jeweler and he want to import as a special category member of IABX, even then IGCRS is not applicable. If both are different entities, for example, if the TRQ holder wants to import through some other qualified jeweler or through some nominated agency, then IGCRS is applicable. I think this was requested by the TRQ holders for quite long time regarding the IGCRS applicability, which was restricting some of the TRQ holders to import gold because of the applicability, because then they have to necessarily enter into manufacturing activity and other things. So now this will permit the TRQ holders to do bullion trading also, particularly when the importer and TRQ holders are the same. Also, it will promote the India International Bullion Exchange, and the volume and the liquidity is expected to improve.
Is there a date by which fresh applications for the following year need to be submitted for TRQ applications?
For TRQ applications for the next financial year, that is 2024-25, are open on the website of the DGFT till 29th of February 2024. So 29th February 2024 is the last date. And this year the quota has been increased to 160 tons for the next financial year. So entities should apply as fast as possible.
Thank you so much. Thank you so much, Premnaji, for just clarifying that. Let's get into the technicals for gold for the coming week. One of the things I've noticed on the US spot daily charts is the formation of this symmetrical triangle. You can see that prices are slowly converging and have been flattening around this range from 2008, which is the major support, to this pivot of 2064 that we have here. Much of this lack of direction is because there's not a clear pathway for how the monetary policy rates are going to look like. We now know that in March, we're not going to have the first US interest rate cuts. It is probably going to be in the month of May. But at the same time, we also do not see any reasons for why you would see follow through selling in gold as well, which is why you see this 2008 support holding. We expect this trajectory to continue. But very soon, what is going to happen is either one of these levels is going to be tested. Our guess and hunch is that the levels up above, which is 2064, is likely where the price action is going to move. But it might take some time for this resistance to be challenged. The danger also lies that if you tend to remain in this zone for too long, you have a risk of running below this 2008 support, and it will expose the metal to lows of 1984, where the other major support also lies. On the economic calendar, we have on Tuesday, which is the 13th of February, we have the CPI core inflation rate reading as well. Previous inflation readings have shown that inflation has been moderating, and the Fed will also be looking towards these inflation readings to really make sure that its decision to not cut rates in March is validated. So this would be the main focal point for the markets next week as well. That's the price action update for the coming week. Premnaji, thank you so much for the clarification on the IGCRS as well. Looking forward to having you more on the podcast. But till then, thank you so much and goodbye.